Question 1. In light of recent developments, a tornado severely damaged Lily's Fine Furniture, a retail store in Toledo, Ohio. Although the building was insured under a commercial property policy with business income coverage, the building repair took 6 months. Lily had to close operations temporarily but managed to rent a nearby facility for 3 months. During restoration, she incurred substantial rental and advertising costs. Which of the following would be under her business income coverage form? A. Rental costs and advertising expenses as part of the extra expense coverage. B. Only the income lost during the full 6-month closure period. C. The property damage to furniture under business income coverage. D. The full 6-month rent under loss of use provisions. Answer. Correct answer A. Explanation. Business income coverage CP 030 includes extra expense coverage, which covers necessary expenses incurred to avoid or minimize the suspension of operations, such as temporary rent and advertising. The policy does not cover the furniture damage directly. That's under E. Loss of use provisions are typically in homeowners' policies, not commercial. Ohio law follows ISO forms closely, and this coverage aligns with standard policy design and the principle of indemnity. Question 2. While examining a renewal application for a commercial liability policy, you discover that the applicant, Mr. Alvarez, failed to disclose that his company was previously sued for negligence related to a product defect which insurance principle is most violated here. A. Adhesion. B. Subrogation. C. Utmost good faith. D. Aleatory. Answer. Correct answer C. Explanation. Utmost good faith is the foundational insurance principle requiring both parties to act honestly and disclose all material facts. Mr. Alvarez's failure to disclose prior litigation is breach. Adhesion refers to the insurer writing the contract. Aleatory to unequal value exchange is a subrogation to the insurer's right to recover from third parties. Per Ohio Everend Code SS 3901.19, material misrepresentation can void the policy. Question 3. From the perspective of internal control in small businesses, what is the most effective way to mitigate losses from employee theft, and how does a commercial crime policy complement this? A. Relying solely on fidelity bonds to cover all potential losses. B. Conducting background checks and relying on management oversight. C. Having dual controls for cash handling and purchasing crime coverage form CR 021. D. Maintaining strict inventory records and assuming losses will be minimal. Answer. Correct answer C. Explanation. Dual controls reduce risk exposure and form CR 021. Employee theft covers losses from dishonest acts by employees. Fidelity bonds are limited in scope, while management oversight and inventory records are essential. They are insufficient alone. Per ISO crime forms and Ohio Department of Insurance OD guidance, layered risk control with appropriate coverage is best practice. Question 4. Demonstrated by a recent case is Naylor signed an insurance application and submitted payment to bind commercial property coverage. The insurer issued a binder but never sent a formal policy. A fire destroyed her property 3 days later. Is there a valid contract? A. No, because the actual policy was not delivered. B. Yes, because offer of acceptance and consideration were present. C. No, because the insurer never formally accepted the risk. D. Yes, but only if the policy was backdated. Answer. Correct answer B. Explanation. An insurance contract requires offer, acceptance, consideration, legal purpose, and competent parties. The binder serves as temporary acceptance and evidence of coverage. In Ohio, oral or written binders are enforceable under R.C. SS 3929.27. Delivery of the full policy is not prerequisite once binding occurs. This reflects enforceable contracts in commercial lines when essentials are met. Question 5. Given the circumstances, Metro Auto Repair, which sells used vehicles and also performs repairs as garage coverage form CG 013, a customer's car is damaged by fire while in Metro's custody for repair. Which part of the garage coverage responds? A. Garage keeper's coverage under the physical damage section. B. Liability section since it occurred on premises. C. Uninsured motorist section for the customer. D. Dealer's physical damage section for covered autos. Answer. Correct answer A. Explanation. Garage keepers coverage protects customer vehicles left in the care, custody, or control of the business. The fire is a covered peril under direct primary or excess garage keepers options. Liability section wouldn't respond unless negligence is proven. UMUM is irrelevant here. Dealer's physical damage covers the dealer's own autos, not customers. Per ISO and Ohio Department standards, proper coverage must be endorsed. Question 6. Through careful analysis of a dealer policy, which of the following would be excluded under coverage? Bodily injury and property damage, A. Slip and fall injury on insured's premises, B. Damage to customer property caused by employee negligence, C. Intentional injury caused by the insured security guard, D. Liability arising from subcontractors' actions. Answer. Correct answer. See explanation. Intentional acts are typically excluded unless bodily injury results from reasonable force to protect persons or property. The ICGL for CG01 specifically excludes expected or intended injury unless in self-defense. Ohio law adheres to this ISO model. Subcontractor actions may be covered if vicarious liability exists. Slip and fall and negligent acts are within scope. Question 7. Mr. Winston, a commercial real estate developer, applies for property insurance on several unoccupied buildings awaiting tenants. The insurer increases the premium and adds restrictive endorsements. Mr. Winston argues this is unfair. Which underwriting principle best justifies the insurer's decision? A. Moral hazard avoidance. B. Risk pooling strategy. C. Classification and selection of risk. D. Adverse selection enhancement. Answer. Correct answer. C. Explanation. Underwriting classifies, selects, and prices risk appropriately. Vacant buildings pose increased exposure to vandalism, theft, and fire. Justifying rating surcharges or exclusions. This is a moral hazard unless there's intent to defraud. Adverse selection refers to applicants with high risk seeking insurance disproportionately. Ohio underwriting guidelines support higher scrutiny for vacant properties. Question 8. In comparison with full value policies, how does a coinsurance clause encourage insureds to insure to value? A. It reduces premiums regardless of coverage level. B. It limits payout unless the coinsurance percentage is met. C. It voids the policy if the limit is too low. D. It allows replacement cost even with inadequate limits. Answer. Correct answer. B. Explanation. Coinsurance clauses require policyholders to carry insurance equal to a specified percentage, e.g., 80% of property value. If the amount carried is below the threshold, a penalty applies at claim time, reducing recovery. Ohio insurers use standard ISO forms with this clause. This promotes fairness and prevents underinsurance in the risk pool. Question 9. During the process of an internal investigation, a former employee sues GreenTech Engineering for wrongful termination, citing age discrimination. The company has an employee endorsement. Which of the following statements is most accurate? A. B covers only current employee actions, not former ones. B. Coverage is excluded unless the suit involves physical injury. C. B may cover the defense and settlement for such employment-related claims. D. B requires the employee to prove malicious intent. Answer. Correct answer. C. Explanation. B provides coverage for claims related to wrongful termination, discrimination, harassment, and similar employment practices. Regardless of current or former employment, defense and settlement costs are covered, subject to exclusions and deductibles. Malicious intent is not prerequisite for coverage. Ohio businesses increasingly use employee endorsements due to rising litigation. Question 10. To illustrate this point, a tech company ships sensitive computer servers valued at $400,000 across Ohio weekly. Which coverage form is best suited to insure these items during transit? A. Business owner's policy, BOP property section. B. Commercial general liability coverage. B. C. Commercial inland marine. Transportation coverage. D. Commercial property special form. Answer. Correct answer. C. Explanation. Commercial inland marine insurance covers property in transit or of a mobile nature. Transportation coverage forms specifically protect high-value movable goods in shipment. BOPs offer limited off-premises coverage. CGL coverage B relates to personnel advertising injury. Special form under CPP covers property insured premises but not during transit. Inland marine policies are essential for tech and logistics firms in Ohio. Question 11. The correlation between symbol usage in a business auto coverage form and the scope of coverage is critical, as Cortez insures her delivery fleet under backed with symbol 7. Later, she rents a box truck to deliver overflow orders and is involved in a multi-vehicle accident. The rental vehicle is not scheduled on the policy. Which of the following statements is most accurate? A symbol 7 covers autos specifically described, so the rental truck is not covered. B. Symbol 1 provides the broadest liability coverage including non-owned autos. C. Symbol 8 would have covered the rental truck if selected. D. Symbol 9 covers the rental truck under automatic physical damage. Answer. Correct answer, A. Explanation. Symbol 7 only covers the specifically described autos listed in the policy. The rental truck was not scheduled, so no coverage applies. The Symbol 8 covers hired autos like rentals, and Symbol 1, if selected, covers any auto for liability, but is Cortez did not have them. Symbol 9 applies to non-owned autos used by employees, not rentals. Ohio insurers use ISO forms where correct usage determines coverage. Question 12. During the process of renewing a policy, Mr. Brandon, an insurance agent, forgot to add a requested endorsement for flood coverage on a client's commercial property policy. Month later, flood damage occurs and the client files claim. What liability does Mr. Brandon most likely face? A. No liability because the policyholder signed the renewal form. B. Potential liability due to failure in professional duty. C. The insurer bears liability for issuing an incomplete policy. D. No liability as flood is typically excluded anyway. Answer. Correct answer, B. Explanation. As an omissions liability may arise if a producer fails to act in accordance with reasonable professional standards. Failure to request or follow through on coverage specifically discussed can lead to a negligence claim. Under Ohio Revised Code SS 3905, agents owe fiduciary duties to clients, and courts have held producers accountable for omissions that cause measurable loss, even if the underlying peril flood is typically excluded. Question 13. In light of recent developments, a tech startup, NovaSpark, is sued by a competitor claiming NovaSpark's website content plagiarized their copyrighted material and caused reputational harm. Under their EGL coverage B, how would the insurer respond? A. The claim is excluded because copyright is not covered. B. The claim is covered as personal and advertising injury. C. The claim is only covered under cyber liability insurance. D. The claim is covered only if bodily injury resulted. Answer. Correct answer, B. Explanation. Coverage B of the CGL policy includes personal and advertising injury, which can encompass copyright infringement in an advertisement. This applies if the content was published as part of marketing or promotion. The cyber liability may overlap but isn't required here. However, CGL policies based on ISO 4 CG01 explicitly cover this type of risk. There is no requirement for bodily injury under coverage B. Question 14. To determine whether ABC Manufacturing should replace a damaged $500,000 piece of machinery, the adjuster considers both the replacement cost and depreciation. The original equipment was 10 years old and current replacement cost is $600,000. What valuation method is being applied if depreciation is deducted? A. Replacement cost. B. Actual cash value. C. Functional replacement cost. D. Market value. Answer. Correct answer, B. Explanation. Actual cash value (ACV) equals replacement cost. Depreciation. Since depreciation is considered, the valuation reflects ACV. Replacement cost pays without depreciation. Functional replacement cost applies when functionally equivalent but less expensive equipment is substituted. Ohio commercial property policies typically default to ACV unless RC is endorsed per CP 010 and state endorsements. Question 15. Contrary to popular belief, it is not always legal for an insurer to non-renew a commercial policy in Ohio. Which of the following scenarios would most likely violate Ohio's unfair trade practices laws? A. Non-renewal due to insurer exiting the commercial market entirely. B. Non-renewal based on excessive claims filed within the policy period. C. Non-renewal due to the policyholder's race or ethnicity. D. Non-renewal for failure to comply with underwriting recommendations. Answer. Correct answer. C. Explanation. Under Ohio Revised Code SS 3901.21, discrimination based on race, ethnicity, or other protected classes is prohibited. Unfair trade practice. Non-renewal for claims or non-compliance with underwriting standards is legal if properly justified and documented. Insurers exiting line of business can non-renew, provided they follow notice and reporting procedures. Question 16. Is Zhao owns a bakery and carries an equipment breakdown policy. During a power surge or industrial ovens circuit board fries, halting production. Which of the following best describes how a policy would respond? A. No coverage because power surges are not internal equipment failures. B. Covered as equipment breakdown covers electrical damage from power surges. C. Covered only if caused by fire. D. Covered only under her commercial property policy. Answer. Correct answer. B. Explanation. Equipment breakdown coverage, formerly boiler and machinery, includes protection for electrical arcing and power surges. These are internal failures, even if triggered externally. Commercial property policies often exclude this peril unless endorsed. Per ISO/EB 020 form and Ohio insurance guidance, this coverage is essential for operations relying on sensitive machinery. Question 17. Considering the evidence, a construction firm in Akron insures a project under a builder's risk policy. Vandals damage unfinished interiors during off hours. Which condition affects the claim's validity under typical builder's risk coverage? A. The structure must be 100% complete for coverage to apply. B. The property must be permanently occupied. C. The damage must occur during construction and not after completion. D. The contractor must have completed the building inspection. Answer. Correct answer. C. Explanation. Builder's risk coverage applies only during the construction period. Once the building is completed or occupied, the policy typically terminates unless extended. Vandalism during ongoing construction is covered. Ohio insurers follow ISO CP 020 forms, which clarify that the policy ceases at completion or occupancy. Occupancy or inspection are not preconditions for claim payment if still under construction. Question 18. The traditional approach to managing high-limit liability exposure includes using umbrella liability policies. A landscaping company is sued for $2 million in damages after a chemical spill. Their Prima CGL policy has a $1 million occurrence limit. How would the umbrella policy respond? A. Pays only if the insured exhausts the CGL and pays the deductible. B. Pays after the CGL is exhausted, covering the excess $1 million. C. Pays only if all endorsements are in place. D. Pays from the first dollar for any claim. Answer. Correct answer. B. Explanation. A commercial umbrella policy provides excess coverage above the primary policy limits. Here it would cover the $1 million over the exhausted CGL policy. It can also provide broader coverage in some cases, but is not first dollar coverage unless a self-insured retention cert applies. ISO Q01 form governs umbrella policies in Ohio. Question 19. Among the various reasons for cancellation, which of the following would allow an insurer to cancel a commercial policy midterm in Ohio? A. The insured files a claim. B. The insurer plans to leave the Ohio market next year. C. The insured fails to pay premium after a grace period. D. The insured changes mailing address. Answer. Correct answer. C. Explanation. Non-payment of premium is a valid ground for midterm cancellation under Ohio law. Per Ohio Revised Code SS 3937.25, insurers must give at least 10 days notice. Filing claim is not justifiable reason midterm, nor is future market exit. Address changes must be updated but are not grounds for cancellation. Question 20. Is Delgado, a commercial real estate agent, is sued after misrepresenting the square footage of a leased office. The tenant alleges financial damages. Under which policy would she most likely find coverage? A. Commercial general liability. B. Property policy with liability endorsement. C. Errors and omissions policy. D. Directors and officers policy. Answer. Correct answer. C. Explanation. EO policies cover claims of negligence, misrepresentation, and failure to perform professional duties. CGL does not cover professional errors. Property policies focus on physical damage. DO covers decisions by company officers, not daily misrepresentation by agents. Ohio's insurance market often requires EO coverage for licensed professionals, including real estate agents. Question 21. To better understand employer obligations in Ohio, consider that Mr. Jensen, who owns a mid-sized manufacturing firm in Cincinnati, opts to self-insure for workers' compensation. After an employee suffers severe injury on site, the employer delays benefit payments, citing cash flow issues. What regulatory action could this trigger? A. No action, as self-insured employers have discretion over payment timing. B. OD may impose penalty, but only if the delay exceeds 90 days. C. The Ohio Bureau of Workers' Compensation may revoke self-insured status. D. The injured worker must file civil lawsuit to receive compensation. Answer. Correct answer. C. Explanation. Self-insured employers in Ohio are regulated by the Bureau of Workers' Compensation, the OD. They must comply with the same benefit standards as state-fund employers, including prompt benefit payments under Ohio Administrative Code 4123-1903. Delays or failure to pay can lead to penalties or revocation of self-insured status. Civil lawsuits are not the first court action for statutory benefits. Question 22. In comparison with commercial package policies, what is a primary feature of the business owner's policy that makes it favorable for small businesses? A. Custom-built endorsements for each line of coverage. B. Broader eligibility criteria for all types of operations. C. Simplified rating and pre-packaged coverages for efficiency. D. Requires separate underwriting for liability and property. Answer. Correct answer. C. Explanation. The BOP offers simplified rating and bundling of property and liability coverages, making it efficient and affordable for qualifying small businesses. Unlike the CPP, it has less customization but includes standard endorsements. Eligibility is limited to certain business classes. Ohio insurers adopt ISO BOP Form BP03, and coverage is usually standardized to promote consistency and speed in underwriting. Question 23. A critical examination of indemnity reveals that it does not always restore the insured perfectly. Mr. Horowitz owns a fine art gallery in Dayton. A rare sculpture is destroyed in a fire. The item's market value exceeded the insured amount. Under his commercial property policy, which principle applies? A. Indemnity. Payment is capped at the policy limit. B. Subrogation. Allows recovery from third party. C. Utmost good faith. Restricts overvaluation. D. Adhesion. Allows Horowitz to demand full market value. Answer. Correct answer. A. Explanation. The principle of indemnity ensures the insured is restored to their financial position before the loss, but not better. Recovery is limited to the lesser of the policy limit or the actual loss. Fine art often requires scheduled coverage to reflect full market value. Without evaluation endorsement. Standard forms cap payment at the insured amount. Ohio follows ASO CP 010 terms for this. Question 24. During the process of a claim review, Ms. Rivera disputes the valuation offered by her insurer for property damage to her commercial building. The disagreement escalates. What is her next step under the standard loss conditions? A. File a complaint directly with the NAIC. B. Demand an appraisal as permitted by policy terms. C. Request arbitration through the Department of Insurance. D. Immediately proceed to civil court. Answer. Correct answer. B. Explanation. The standard loss conditions of the commercial property policy CP010 include an appraisal clause that allows either party to request a formal appraisal process to resolve disputes over value and not coverage. Arbitration is not standard in property insurance unless added by endorsement. The OD does not arbitrate claims. Court action is later step if appraisal fails. Question 25. Mr. Farrow, who runs a small logistics company, paid a premium to bind cargo coverage but later misrepresented the frequency of high-value shipments. The insurer avoids the contract after a claim is filed. Which contractual element was breached? A. Offer. B. Consideration. C. Legal purpose. D. Competent parties. Answer. Correct answer. B. Explanation. Although consideration, payment of premium was provided, material misrepresentation affects the meeting of the minds. Sub-element of consideration. The contract remains voidable by the insurer. Ohio courts consider whether accurate information was exchanged to form mutual agreement. ORCSS 3901.19 allows policy rescission for misrepresentation of material facts. Question 26. As evidenced by a construction site accident claim, a general contractor CGL policy provided defense coverage. The insurer paid attorney fees and court costs exceeding the policy's occurrence limit. What does this indicate? A. The insurer acted outside the policy scope. B. Supplementary payments are paid in addition to the policy limit. C. The contractor is responsible for any excess payments. D. Only settlements apply toward the limit, not legal costs. Answer. Correct answer. B. Explanation. CGL policies include supplementary payments that cover defense costs, bail bonds, and other legal expenses in addition to the liability limits. These do not reduce the policy's per occurrence limit. The ISO CG01 form and Ohio insurance standards reflect this structure, ensuring robust defense even if legal costs are substantial. Question 27. The growing trend in remote work and mobile equipment usage has led to increased claims involving unscheduled property. Istasingzit firm loses 10 laptops in burglary. They were not listed on the property schedule. Which form best addresses this? A. Building and personal property coverage form. B. Commercial inland marine. Installation floater. C. Commercial inland marine. Equipment floater. D. Business owner's policy. Property section. Answer. Correct answer. C. Explanation. Equipment floaters provide coverage for portable business property not confined to a single location and not necessarily scheduled, especially under blanket coverage. Laptops and tech gear are prime examples. BPP requires items to be on site or scheduled. The installation floater covers property during installation, not normal usage. The BOP has limited off-premises coverage. Question 20. Historically speaking, Lloyd's associations differ significantly from traditional insurance companies. Which of the following best describes how they operate? A. Lloyd's acts as federal insurer offering blanket coverage. B. It pools policyholders' funds for mutual sharing of losses. C. It operates through syndicates of individual underwriters. D. Lloyd's sells stock to finance reserve requirements. Answer. Correct answer. C. Explanation. Lloyd's associations, including Lloyd's of London, operate through syndicates composed of individual underwriters who assume risk personally or on behalf of group. They are not mutual insurers and do not issue stock. Ohio recognizes surplus lines carriers like Lloyd's for unique or high-risk coverage is not available in the admitted market. Question 29. In a modern context of mixed-use buildings, a condominium association in Columbus needs to ensure the building structure while allowing unit owners to ensure their interior improvements. Which coverage form applies? A. Commercial general liability form. B. Commercial property. Condo association form CP017. C. Business owner's policy with condo endorsement. D. Inland marine floater for real property. Answer. Correct answer. B. Explanation. The Condo Association Coverage Form CP017 covers building structures and common elements under the association's responsibility. Unit owners can use CP018 to cover their personal property and interior improvements. This division is critical in multi-unit ownership scenarios and follows Ohio's adoption of ISO form structures. Question 30. The emerging pattern of more frequent natural disasters has prompted businesses to seek broader protection. Which of the following best describes the role of a DIC policy in commercial insurance? A. Replaces the CGL for earthquake and flood coverage. B. Supplements standard property coverage by filling excluded perils. C. Covers only direct damage from employee negligence. D. Requires no underlying property policy to respond. Answer. Correct answer. B. Explanation. A difference in conditions. DIC policy fills gaps left by standard property forms, often providing flood, earthquake, or unusual risk protection. It's tailored and usually excess or supplementary. DIC policies don't replace CGL or commercial property policies, but enhance them. Ohio insurers use manuscript DIC forms, often for larger or high-risk properties.